Welcome back to Investing Talk podcast.
Great to be here.
Today we're focusing on a really compelling name in the semiconductor space. It's a company, PUA Technologies, that's kind of foundational for high-speed data centers, AI infrastructure.
That's right. It's getting a lot of buzz.
It really is. And the big question, the one everyone seems to be asking, is pretty straightforward. Is PUA Technologies a good time to buy right now?
Yeah, and look, this company is almost the textbook definition of a high-stakes growth story, isn't it?
Mm-hmm.
You've got truly revolutionary tech, massive market potential on one side, but on the other, significant financial risk, at least for now. Getting your head around that trade-off is absolutely crucial for this analysis.
Absolutely. And before we dive into the nuts and bolts, just a quick reminder to please subscribe, like, and comment on our discussion. We really appreciate it.
Yeah, definitely. And let us know if there's a specific company you want us to look into next. Just drop it in the comments below.
Great suggestion. So our mission today really is to cut through some of the noise around PUA.
Exactly. We're going to dissect the core technology. Look at their current financial health, or lack thereof, you could argue.
Fair point.
We'll examine the technical momentum that's been driving the share price, and maybe most importantly, look at the major catalysts, the potential triggers looming over the next, say, 3 to 6 months. Give you that comprehensive roadmap.
Okay, let's start right at the beginning. The product. PUA isn't selling software. This is hardware, right? Connectivity solutions. What exactly is this product? Why is it grabbing so much attention from the AI infrastructure builders?
Okay, so at the absolute center of everything PUA does is its proprietary PUA optical interposer platform. You need to understand this first. Essentially, it's a completely new way of thinking about how optical components get made and packaged.
Optical components.
Yeah.
The bits that send data using light.
Precisely, those gets. And the interposer is critical for these AI and hyperscale companies because it solves a massive architectural bottleneck they're facing.
Okay, unpack that a bit. What's the bottleneck?
Well, the traditional ways of putting these optical parts together are, frankly, slow, expensive, and they actually limit the speed you can achieve. POH uses wafer-level manufacturing, semiconductor manufacturing techniques,
Right.
to seamlessly integrate the electronic chips and the light-based devices onto one single tiny platform.
Okay, so that dramatically shrinks the size, reduces power needs, makes it easier to manufacture.
Exactly, all of the above. You get superior performance, better cost efficiency, and much better scalability, right when the world desperately needs these improvements for building out these enormous AI clusters.
So it sounds like it's positioned perfectly for feeding the huge data appetite of modern AI models.
That's the core value proposition, yes.
Yeah.
It's very much cutting-edge tech for next-gen optical connectivity.
Okay, that tech sounds genuinely transformative, but, we have to ground this in financial reality. Amazing tech doesn't always mean immediate revenue.
Not at all. And that's critical here.
Looking at their financial status, it seems very much like a company in transition. Give us the raw numbers.
Yeah, transition is the right word.
Yep.
And it's the essential caveat for anyone looking at this. They are moving from pure R&D into commercialization. So if you look at trailing 12-month revenue, TTM revenue, it's pretty modest, $467,946.
Okay, under $500,000 in revenue.
Right. And contrast that with the TTM net loss, a substantial $53.92 million.
Wow. Okay, wait a second. A company burning almost $54 million a year with less than $500,000 in sales is currently valued by the market at over $800 million, $807 million market cap.
Yep. $807.41 million market cap.
That sounds like the definition of high risk, high reward.
It absolutely is. It clearly reflects the market pricing and the future potential revenue from this tech, not the current earnings picture. But here's a really interesting twist, something quite counterintuitive for this kind of growth stock. Its beta is only 0.38.
0.38, so it's significantly less volatile than the overall market. A company bleeding cash with unproven scalability is less jumpy than the S&P 500. How does that work? What does that suggest?
It strongly hints at deep underlying institutional conviction. The professional money managers seem convinced. They're looking past today's balance sheet,
Right,
and betting heavily that the intellectual property, the IP value, and the eventual commercial revenue will more than justify this valuation down the line.
Okay, so that institutional conviction is key. Let's trace the momentum that built that conviction. What happened over the last few months specifically that really pushed this stock upwards?
Well, the story of the last quarter, really the last 3 months, is all about massive capital injections kind of overriding the the short-term financial results.
Okay.
The company seriously beefed up its balance sheet. Two major actions. First, back in July, there was a separate $25 million equity offering that was fully subscribed, by the way, though at a bit of a discount, about 12%.
Okay, 25 million.
And then, more recently, they closed a really significant $75 million private placement.
75 million. Okay, so added together, that's $100 million. That gives them substantial runway now. Serious dry powder to keep scaling up without worrying about cash flow immediately.
Exactly. That funding was huge. But here's where it gets fascinating, that disconnect I mentioned. In August, PIP reported its Q2 earnings, and they missed the consensus estimates pretty badly. Earnings per share miss was 2021 done. Revenue also missed. They reported $0.27 million versus expectations of around $0.39 million.
Right. And normally, especially for a development stage company, a big miss like that would hammer the stock. So how did it react to that negative news?
This is where you really saw that institutional conviction flex its muscles. Despite that earnings miss, we saw major institutional players, names like Raymond James, Financial, Quadriger Capital, actually build significant new positions in August.
After the miss.
After the miss.
Oh.
It was a powerful vote of confidence, and it pushed the share price up to new 12-month highs. The market basically shrugged and said, look, the quarter doesn't matter as much as the technology and the fact they now have the cash runway.
Wow. Okay. And they also boosted their product visibility recently, right? In September.
They did. At a major industry event in China, the China International Optoelectronic Expo, CIOE 2025, POET showcased their latest highest speed stuff, the next-gen 1.6T Teralight optical engine and the Blazar light source.
1.6T, that's terabits per second.
That's right. These are specifically aimed right at that AI scale-up market. Doing live demos there really increased their visibility with the exact kind of partners they need to win over for future design wins.
Okay, so the fundamental picture is rough, negative earnings, low revenue, but the momentum, fueled by cash and belief in the tech, is undeniable. Let's switch gears to the charts. What are the technical analysts, the day traders, seeing in the price action?
Yeah, the technical setup really confirms that bullish story. The stock's trading, as you said, near multi-year highs, currently around $8.72. The 52-week range is quite wide, $3.09 on the low end, up to $9.11 on the high end.
So it's right near that peak. What are the key price levels traders are watching? Support and resistance.
Well, we've seen some healthy consolidation lately after the run-up. Key support seems to have formed pretty solidly around the $8.25 mark.
Okay.
The immediate hurdle, both psychologically and technically, is that 52-week high at $9.25. Looking out, say, 3 months, the outlook suggests a bullish trading range potentially between $7.50 and maybe $11.
$11, so potential for a significant move higher.
Yes, but a real breakout above that $9.11 resistance likely needs some kind of positive news catalyst to push it through.
And it's trading well above its key moving averages. That usually confirms an uptrend, right?
It's significantly above both the 50-day simple moving average, which is way down at $5.46, and the 200-day SMA, which is at $4.88. Yep. That's textbook confirmation of a strong bullish trend. Now, for listeners maybe thinking about when to potentially enter, there's an interesting detail. The 14-day Relative Strength Index, the RSI.
RSI. Okay, for maybe some newer listeners, what does the RSI tell us, and why is its current level interesting?
Right. So the RSI basically measures the speed and change of price movements.
Yeah.
It runs on a scale from 0 to 100. Generally, a reading below 30 is considered oversold, meaning the selling might be overdone.
Potentially a bounce is coming.
Potentially. And above 70 is considered overbought. Maybe it's run up too fast. POET's 14-day RSI right now is sitting at 39.64.
So 39, that's quite low considering it's near 52-week highs.
Exactly. It's not technically oversold yet, but it's definitely cooled off from higher levels. It suggests the recent buying pressure has eased a bit, maybe some profit-taking or consolidation. This could potentially offer a more attractive entry point than chasing the absolute peak, assuming the bullish trend continues.
Interesting. So the technicals confirm the momentum, the RSI suggests a potential entry setup, and the analyst community seems to be on board too. Still seeing a strong buy rating.
Yes, the strong buy consensus rating persists. That reflects Wall Street's confidence, primarily in the core technology, and the massive market opportunity it addresses. They believe the company is really on the verge of crossing that chasm, from R&D focus to being a commercial powerhouse.
Okay, let's look forward then. We know the backdrop. What specific confirmed events should people circle on their calendars? And maybe more excitingly, what are the big speculative triggers, the rumors that could really ignite the share price?
Right. There are several firm dates that are going to be critical market drivers.
Hmm.
First up, mark October 25th, 2025. That's a major ETF rebalancing window, specifically for tech and AI index funds.
Ah, okay.
Given POET's rising profile and market cap, it could potentially see significant buying pressure from funds that have to own it based on index rules. Could introduce some volatility and flow-driven buying.
Good point. And then the big one for any company trying to prove its transition, earnings.
Absolutely. November 14th, 2025. That's the Q3 2025 earnings release date. This is make or break for investors looking for tangible proof of revenue inflection. We need to see evidence that commercialization is actually starting to generate meaningful sales.
That's a moment of truth, maybe?
It's a big one. Then following that, on December 5th, 2025, we get the large institutional 13F filings disclosed.
Right, where the big funds reveal their holdings.
Exactly. That gives us a real-time peek, well, slightly delayed, but still useful, into whether those funds that bought in recently, like Quadrature Capital we mentioned, are adding to their positions, holding steady, or maybe trimming into year-end. It's a good sentiment indicator.
Okay, those are the firm dates. What about the less certain but potentially more explosive speculative news or rumors? What's the industry chatter?
Well, there are three main speculative themes really fueling excitement right now. First, there's persistent talk about a potential multi-million-dollar supply agreement. Speculation points to a leading cloud AI player, either U.S. or China-based. The timing rumors may be finalized by early 2026. That kind of deal would be absolutely transformative. That's a revenue validation everyone is waiting for.
That would be the home run, for sure. What else?
Second rumor floating around involves a potential equity investment or strategic partnership, maybe from a tier 1 chip maker or even one of the big hyperscale customers themselves, sort of building on that recent $75 million raise momentum. A strategic partner would add huge validation.
Definitely. And the third?
Third, just general industry chatter suggesting a major design win or a significant volume order announcement could be coming soon, maybe before Q1 2026. Specifically for those new Terralight or Blazar platforms they just showcased.
Okay, lots of potential upside catalysts. We built a strong case based on the tech, the funding, the momentum, the potential news flow, but we have to be balanced. Let's revisit the risks. What's the biggest single risk factor hanging over POET right now?
Yeah, you absolutely have to acknowledge the risk. And the primary one is still execution risk, tied directly to that profitability challenge. That negative earnings per share figure, negative ERTA 73 TTM, that's a big number. And this sector is hyper-competitive. It demands constant, heavy investment in R&D just to stay ahead. Now look, that recent $75 million capital raise, it significantly mitigates the immediate solvency risk. They have breathing room.
Right.
But the biggest risk is probably time. They really need to convert this technology leadership into major volume orders and revenue streams before either the competition manages to catch up or their cash burn simply outpaces their commercial progress.
Okay, so let's try and pull this all together. Summarizing the overall thesis, we have what looks like truly revolutionary tech solving a critical problem for the biggest tech players on the planet.
Right.
Combined with massive institutional backing demonstrated by recent funding, multiple upcoming potential catalysts, both confirmed and speculative. But all this is set against a backdrop of really significant current operating losses.
That sums it up well. And if you connect the dots, the bullish factors seem to strongly outweigh that current financial deficit, but with a huge caveat. Management absolutely has to execute flawlessly on this commercialization plan over the next, say, 12 months.
So with that context, what's your overall rating?
Given everything we've discussed, the tech potential, the funding, the catalysts, balance against the execution risk, our overall bullish rating for POET Technologies right now is an 8 out of 10.
An 8? That's very strong confidence, especially given the negative current financials. What's the single biggest factor driving that high rating for you?
It really boils down to the combination of two things. First, the optical interposer genuinely solving a critical, immediate industry bottleneck, especially for AI infrastructure buildouts. And second, the overwhelming financial backing shown by sophisticated professional institutional money in those recent placements. They have the potentially game-changing tech, and now, crucially, they have the financial runway. The Q3 earnings in November become the next major test of that execution.
And who is this stock best suited for? What kind of investment horizon makes sense?
You know, it's actually interesting. It seems attractive for potentially two types of investors right now. Tactical traders might see opportunity in the 3 to 6 month time frame. playing the volatility around the November earnings of 13F filings, maybe potential news pops.
Okay.
But it's also compelling for strategic, long-term investors looking years out, positioning themselves to capture what could be a multi-year expansion in the entire market for photonic integration, assuming POET maintains its lead.
Right. Which brings us to our final provocative thought, something for you, the listener, to really think about. POET Technologies is trading near its 52-week highs, despite reporting that trailing 12-month loss of nearly $54 million.
Hmm.
So how do you, as an investor, weigh the massive confidence shown by that professional institutional money, the firms who just poured $75 million into the company, against the fundamental, undeniable requirement for POET to achieve real, verifiable, consistent revenue growth starting very soon, like in the next couple of quarters?
Yeah. That's the absolute crux of it, isn't it? Conviction in the future versus the cold, hard need for near-term financial performance. It's a classic growth stock dilemma.
Indeed it is. Well, we hope this analysis gives you a solid framework to process this information and perhaps apply this kind of structured thinking to your own financial research on other companies, too.
Yeah, thank you for joining us for this look at POET Technologies. It's certainly a fascinating one to watch.
It is. And don't forget to subscribe, and please do comment below with any companies you'd like us to analyze next. Until then, invest wisely.